Hey everyone, Cole Team Yazbek, Coldwell Banker in Steamboat Springs, coming to you today with a friend of mine in the mortgage business, Mr. Josh Kagan. Josh is the senior mortgage lender and branch manager of Cornerstone Home Lending here in Steamboat Springs. How are you, man? Good to see you.
Doing well. Thanks, Cole. How are you?
I can't complain. You know, working from home is interesting, but we're getting through it. So,
Yeah, we're all doing what
first
we
off,
have.
absolutely. I know you're busy and all, so we'll get right into it. But first off, how are you and your family, holding up through all this?
We're doing great. Thanks for asking. There's people are getting a little stir crazy from time to time, but
Sure.
a lot of exercise, a
Good.
lot of Netflix, getting
Yeah.
through. Yeah.
Good to hear. Good to hear. I'm glad you guys are home, safe, and happy.
Thanks for asking.
Absolutely. So, here to answer maybe just some questions about the mortgage industry with you and kind of hear what's going on. How has all this, changed and affected the mortgage industry?
It's affected it on several different levels.
Okay.
Prior to quarantines being implemented and the stay-at-home orders, you might have noticed that in early March, when the stock market was initially tanking because of the fears of COVID, that rates came down. And so beginning of March, we were getting into, you know, any rate is individual depending on the person's scenario, credit score, loan to value, type of loan, et cetera. But 30-year fix, we're getting down into the low threes early March, and then kind of all hell broke loose. And we were at 3.25 one day, and middle of the following week we were up to 5.
Right.
Gotcha. There was, for several reasons, there was a liquidity crunch. Everybody had to sell assets of any kind, including mortgage-backed securities, even if it was at a loss. And so it just created this crazy up and down. So rates spiked, and then the Fed jumped in and started buying all kinds of mortgage-backed securities, and they came way down. They came down too fast, and that caused problems of its own, so they backed off. And as of late, the Fed seems to have figured it out a little bit and created they're buying enough to keep the rates relatively stable and low. So from a rate perspective, COVID has created low rates.
Good to hear.
There are some issues that we're facing. The jumbo market, for one, has pretty much dried up, except for some banks that are funding them from their own portfolio. But even big banks like Chase, I've heard, are not doing jumbos right now. And the reason for that is because the Fed is buying mortgage bonds, but they're only buying conforming mortgage bonds. Jumbo mortgage bonds have to be sold to other investors, and those investors just aren't there right now. So
for those who don't understand, what is a jumbo loan, so they can have a better perspective?
In Routt County, it's anything over 639, I believe, is the 2020 loan amount. So any loan under that, we can still do as a conforming, and we can go up to 95% on a primary residence, 90% on a second home. And so we haven't, our ability to fund conforming loans has not been impacted. Our guidelines have changed slightly.
That was my next question.
So as of April 1st, we have to re-verify income and employment the day before closing, or we have to re-verify employment the day before closing. Income, we're required to, for a W-2 employee, get the last paycheck prior to closing to confirm that income and hourly wages are still consistent. For self-employed people, we have to verify the functioning of their business within 15 days of closing. We can do that through business bank statements, invoices, there's a variety of ways we can do. And these are guidelines that come from Fannie Mae and Freddie Mac. So all
Right.
lenders are having to
Wonderful.
have to do this. So if you are, if you have been furloughed, laid off, unless you have a secondary source of income, it's going to be tough at this point until you have a definitive date that you're going to be back up to speed. It's unfortunate, but there's a lot of people going through it.
Yeah, absolutely.
The one, what else? I was going to say something else, but
that's okay. What kind of changes are you seeing to like processes and whatnot, like closing processes and stuff? Are you guys able to be remote, or changes like that? Anything going on?
Yes. So, and I remember what I was going to say before. The other impact that COVID has had, because rates are so low, is that the mortgage lenders are kind of at capacity. So things are taking a little bit longer. And yeah, that's the main effect. If you're doing a purchase, however, those still take priority, and we can get those through.
Wonderful.
So what was the follow-up question there?
Just changes to processes. Are you guys doing more remote stuff?
Sure. Okay. So title companies, so the Secretary of State of Colorado authorized remote notary. And Cornerstone allows that as well. So we can do a fully online closing similar to this. There are a couple forms that you have to actually wet sign. The note is one of them. And so if we're doing a fully remote closing, online closing, what we do is we send out the documents overnight to the borrower that need to be wet signed prior, so that they're back in time for closing, and then the rest of the documents are e-signed and notarized remotely. And then the local title companies, and this is changing every day, so as of now, still doing in-person closings.
Yep.
They only want the person that is signing the closing documents to be there. So realtors and mortgage lenders are asked not to be there. Sometimes the closer will be in the room. Sometimes the closer will just tab the package where it needs to be signed and leave it on the closing table for the borrowers to sign. And then the closer and myself and the realtor can be available FaceTime, phone, whatever makes the most sense. Zoom.
Nice. Yeah.
So but we're getting through. Appraisals have changed.
Right. That was what I was going to ask. Has that process changed? Instead of them going into the home, are they doing it a little different now?
It can, yes. So for purchases, and again, this is for conforming loans. So Fannie Mae, Mac guidelines. So anything 639 or below follows Fannie Mae and Freddie Mac guidelines. And so for purchases, we can do exterior only appraisals.
Okay.
Obviously sometimes there's a benefit to doing a full appraisal. If the inside of the house has some significant upgrades that the appraiser can't necessarily know about without going in. Although there's probably ways to take pictures or videos or do a virtual tour to give them. So we can do exterior only on purchases. On refinances, on about a quarter of them, we've been getting appraisal waivers, which means we don't need an appraisal. And the way we get those is we run the loan through an automated underwriting system for either Fannie or Freddie, depending on who we're going with. And based upon their database of properties and values in the area, in conjunction with the strength of the borrower, it spits out a recommendation And
Wonderful.
if that recommendation is an appraisal waiver, then we don't need to get an appraisal, which speeds up the
Gotcha.
process and saves
Right.
cost as well. Uh, if we're doing a refinance of a Freddie Mac appraisal or a Freddie Mac loan, and we are sending the new loan to Freddie Mac, and also if we're doing a Fannie to Fannie loan, we can
Gotcha.
do exterior only appraisals on those as well. And
Nice.
there's a cutoff depending on the loan to value. If it's a higher loan to value, we may still have to do a full appraisal. But so there's been some loosening of requirements for appraisals.
Yeah. Gotcha. Are you, I mean, you're a busy mortgage broker here in town. Are you consistently still seeing applications come in and whatnot? Are you staying busy?
Yeah, we're busy. I would say it's about 75% refinances right now.
Gotcha.
But, just in the last week, traditionally this is the normal time, as you know, where things
Right.
come on the market, selling season's beginning, and we've seen signs of that. We've got a couple new contracts writing prequels in the last week. I would say that some people that put properties under contract in March who had changes to their situation, whether it be income or job or just concerns,
Yeah.
I've decided to push those contracts out or terminate for now. But
Yeah.
since that initial wave, when kind of the lockdown happened in those mid contracts, people seem that the new contracts, they seem to be on board. They know this is temporary, hopefully, and
Yeah.
there are still they still want a new home.
Yeah.
And
Exactly.
change, and if they're comfortable in their situation, then it still makes sense for those people.
Gotcha. Yeah. So I was gonna kind of go into that. If someone is ready and has the necessary means and all that, you are you comfortable telling someone to go ahead and move forward, or you know every situation's different.
Well, I would say every situation's different, but if it's going to be a home that somebody's going to be in for several years, and they're comfortable in their ability to make the payment and secure in their income/employment situation, then yeah, you got to look 12 months from now, right?
Right. Yeah.
And so, hopefully all this will be behind us at that point, and it's if you find the right property and it's at the right price, rates are great. So
Right.
if you're financing, who knows what it'll be next year. But
Right. And at this point, are you guys doing your best to lock those rates as soon as possible, or
yeah,
just kind of waiting day by day? Or
we learned our lesson in early March.
gotcha.
When we woke up one day and the rates were 1.5 points higher the
Right.
next day, and
Gotcha.
people that were on the fence waiting to see if rates were going to go down were bummed, and
Right.
so that was a good lesson. So my advice has been, if the rate makes sense for you, where it is for your situation, to lock it in. And for a purchase, that's pretty much where we are on a given day, right? Because
Yeah.
it's going to do the purchase regardless. Unless
Right.
the rates were super high all of a sudden. But
Right.
if you're at 3.5 or 3.25, it doesn't make a whole lot of difference. Those rates are all really good, and
Yeah.
we don't know, when the volatility will return, if it will return. I know the Fed's doing the best they can to maintain some stability, but there's only so much they can control. So the rate makes sense, lock it in. And on a refinance, it's similar advice. If the rate makes sense, lock it in, or pick a target rate that makes sense for you. Because if you're
Gotcha.
just trying to time the bottom of the market, you don't know it's the bottom of the market until it's on its way back up.
Right.
So if you're waiting
Exactly.
for 2.5 and we get to 3, and you would have been happy with 3, and then it turns around, well, then you missed the boat. So
Awesome.
I'd say pick a rate that makes sense, and if we hit it, you lock it.
Nice. Awesome. Well, great advice all the way around, great info all the way around. I'm glad you and your family are doing well, and just all around, thank you so much for doing this with me today. I really appreciate it.
My pleasure, Cole. And if you or your clients have any questions, they can contact me directly.
Absolutely.
I'm happy to discuss.
Wonderful. Well, we will make sure we get anyone who has questions your contact info. And thanks again, and we will be in touch soon.
All right, Cole. Be safe.